Hi, this is Andy Hoffman of CryptoGoldCentral.com, the sound money blog of the 21st century. Try my free 7-day trial membership and contact me at ahoffman@CryptoGoldCentral.com to arrange cryptocurrency or precious metal consultations. In today's audio blog, I'm again back to assuage fears at the horrible Bitcoin price of $9,300 from people worried that fudsters will be right, that say fundamentals are worse than 2013 and Bitcoin 1300 is possible. LOL. In today's podcast, I'm using a handful of tweets to describe my thoughts, as I've been more active than ever in expressing them on a real-time basis on the forum where the most educated and unfortunately least educated Bitcoin investors are present. Starting with one yesterday in which I said, consider that last year when Bitcoin rose from 1,000 to 20,000, investor stress was off the charts due to the scaling debate. This year, down 50% from those highs, investor stress is non-existent now that the scaling debate is over. Think about that long and hard, about just how ironic and enigmatic such a statement is, as despite last year's historic 20x run, there was very little fun about it other than the final blow-off from 5,000 to from 5,500 after the November 10th Bcash raid to the December 17th top, when the Mt. Gox trustees started dumping 35,000 Bitcoin to, equally ironically, compensate Bitcoin holders for the massive losses Mt. Gox caused 4 years prior. Throughout those 12 months of hell, as the price rose from $1,000 to $20,000, and in South Korea as high as 25,000, investors were treated to a series of terrifying market plunges for a variety of threats, real and imagined, including the following: Chinese capital controls, Chinese ban on Bitcoin exchange withdrawals, SEC disapproval of the Winklevoss ETF, Bitcoin Unlimited threatening to fork Bitcoin in March, Jihan Wu threatening to fork Bitcoin via the UAHF in June, Segwit 2X threatening to fork Bitcoin in November, Bcash actually forking Bitcoin in August, the BTC-E exchange seized by US regulators, China banning cryptocurrency exchanges, Jamie Dimon calling Bitcoin a fraud, the June ICO crash and associated regulatory crackdown, flippening fears from first Ethereum, then Bcash, then Bcash again, and Bcash again, and then altcoins in general, a potential South Korean exchange ban, and numerous others I can't even recall. Such is the wide world of Bitcoin, wherein normal, news-free times, the thrill of victory, and agony of defeat are often experienced on the same day, which is exactly what occurred this weekend when prices closed Saturday night above $9,900 after a meteoric rise from 8,800 4 days prior, only to plunge below 9,300 by Sunday night, with no news except the opening of CME futures markets Sunday night, in what I call the lazy dog effect. The reason being that this is the third time this year I've happily gone to dinner at the local Lazy Dog restaurant on a Sunday night, during which prices either crashed during what was supposed to be an enjoyable meal or on the way home. Is this because prices are rigged by a cartel, as are stocks, bonds, golds, and all legacy market asset classes? Based on what I wrote in my 3 CGC articles on the topic and everything I've learned observing manipulated markets over a 15-year period, during which I've become well known for being a leading authority on the topic, tells me no, as despite the increasing influence futures markets are having on the price, particularly Sunday night when their 7 p.m. Eastern Standard Time open coincides with the most illiquid time of day for global capital markets, I failed to see the motive or means for Bitcoin's enemies to significantly impact the price to the downside. Conversely, the only significant manipulation opportunity I see as possible would be on the upside, as in a market with so little liquidity, where available for sale supply inexorably declines as demand relentlessly climbs, squeezing shorts would seem a relatively easy operation for a big holder trying to scare the price higher. Yes, I know it often seems like someone is trying to push the price lower, particularly at criminal exchanges like Bitfinex and Bitstamp, which quite obviously house traders attempting to walk the price down and aggressively target sell stop orders each time liquidity thins out. However, there is simply no way that a major entity can consistently move the price down without the supply we know no major entities have, other than, say, the Mt. Gox trustee and Satoshi himself, the former of whom caused massive institutional investment to enter the market when he drove prices down to a $100 billion market cap in February for entirely non-fundamental reasons, and the latter of whom is unlikely to ever touch his stash. To that end, consider that the day the Mt. Gox trustee transferred 16,000 Bitcoin, or exactly 10% of his then 162,000 Bitcoin holdings, on April 26th, the price was $8,900 compared to $9,300 this morning. Did he actually sell those Bitcoin, given that it was reported by, quote, sources that the address they were transferred to is believed to be that of a Bitcoin exchange? I don't know, but if he did, he clearly found the same massive institutional demand at 8,900 as he did at 6,000 2 months prior, and perhaps was wise enough this time around to be a smarter trader and more competent fiduciary agent by utilizing the OTC market. As for the wide world of Bitcoin, where again investors went to sleep praying they wouldn't awake to some horrible news, and again awoke to realize that, as always, there was none, consider a tweet I posted 3 weeks ago after Bitcoin inexplicably plunged from 8,400 to 7,850, just as it at the time seemed it was finally in the clear after finally retaking the key round number of 8,000 and surging thereafter. Let's face it, Bitcoin is the most maddening investment of all time. This is why I spend so much time discussing the fundamentals, like quantifying its valuation and dispelling FUD. I never trade, but hodl and encourage the same. Yes, maddening. In my view, the best possible way of describing an asset unlike any other in history, which, due to its inherent liquidity, with just a few million units of available for sale at any given time, controversial, disruptive impact on a status quo intent on stomping it out, or at the least slowing its rise by all means possible, and the skepticism any new complex technology meets, as did the automobile, airplane, and the internet itself, is subject to wild, volatile price movements, often in the absence of material news to catalyze them. A description, I might add, that's twice as apt today as a year ago, when Bitcoin was about to encounter the aforementioned list of, at the time, seemingly dire and in some cases potentially fatal threats. As while today the price plunges are equally violent and unnerving, the list of potential threats, real and imagined, have dissipated to the point that I no longer have any fears regarding Bitcoin's future, which is probably why plunges like this weekend's are to prices like 9,300 as opposed to, say, the pre-Bcash fork last July to 1,800. To that end, I see that there's an SEC hearing today regarding whether or not Ethereum is a security, which supposedly, at least according to the mainstream media that has no clue of how cryptocurrency works, is the catalyst for last night's price decline, which in my view is an utterly absurd assumption, as if it were truly a major threat, there's no way prices would have surged last week, only to dump Sunday night as if this well-telegraphed event suddenly emerged. To the contrary, the best possible explanations I can offer for a maddening market that turns on a dime as quickly as the dinosaurs in Jurassic Park were described in two tweets this weekend. The first, when Bitcoin failed to exceed $10,000 Saturday morning, and the second, when prices fell below $9,500 later that day. To wit, to preempt any TA fudsters that may claim we are in a bear market, the crypto market cap has consolidated 5% today after surging nearly 17% in the prior 5 days. And subsequently, yep, a battle royale for $10,000 Bitcoin. Fundamentals rule, but long-term TA always a factor. Hence, a key round number like $10,000, when also the 200-day moving average must be overcome. The latter of which was a follow-up to Thursday's tweet when Bitcoin was 9,600 before surging to 9,990 2 days later. Quote, do you want some TA that matters in a bull market? Huge resistance at the key round number of $10,000 because it happens to be the 200-day moving average too. 3 taps and out is the rule, and today was number 2. When 10,000 is inevitably broken, the crypto explosion will be nuclear. In other words, an experienced financial analyst, as I am, with a CFA designation and 2 decades of Wall Street experience, with a firm grip of fundamentals and a basic knowledge of TA, can use the latter as a powerful predictive tool. To wit, my April 30th tweet, as Bitcoin consolidated in the 8,800 to 8,900 range, that, quote, Bitcoin bottomed in February at 5,970, i.e. exactly the $100 billion market level where major institutions started entering. Let's see if BTC has matured enough in the past few months for $150 billion to be its new long-term support level. i.e. roughly 88.25. And what do you know? Before surging to $10,000 5 days later, it bottomed at exactly 88.25 or $150 billion market cap. As discussed in this tweet a day later at Bitcoin 9,200, comparing my thought process with that of the King TA Fudster, who continues to deny the most important aspect of any fundamental or technical analysis, i.e. the change of the primary trend that I publicly declared, rightly or wrongly, in April 12th's end of the crypto bear market audio blog. Quote, the King TA Fudster this morning at 8,900 was terrifying listeners of a best case scenario of Bitcoin 7,600, while I last night pointed out the potentially huge institutional support at 88.25. Regarding news, I yet again cannot emphasize enough how Bitcoin has now built such an anti-fragile, honey badger-like critical mass, there is literally nothing to fear. Sure, governments will from time to time try to slow it down, while exchanges will make mistakes and altcoin scams will be revealed. But in the big picture, nothing can stop it, and thus nothing fundamental caused last night's decline or any others in recent months. That said, I'm extremely curious to see what today's SEC hearing regarding Ethereum will bring. Clearly, if they rule, rightly so, or even suggest that, unlike Bitcoin, Ethereum is a security, it could trigger a round of altcoin selling that may or may not significantly impact Bitcoin's price. Heck, such a scenario could in fact cause Bitcoin dominance to rise significantly, given that it has already been ruled to not be a security, unlike the potential scenario for nearly all other altcoins. Remember, the SEC CFTC hearing about Bitcoin regulation, in which nothing negative was said, was coincidentally on the same day of Bitcoin's bottom, February 6th. Conversely, if the SEC rules or suggests Ethereum is not a security, it could easily trigger a massive surge across the entire crypto sector, taking its valuation well above $500 billion and potentially triggering a new round of unabashed FOMO. We'll see soon what happens in today's version of the wide world of Bitcoin, which ultimately will end in the thrill of victory for those wise enough to hodl. Thanks and have a great crypto day.